Are you constantly losing money in the stock market despite your best efforts? It is frustrating and far more common than you think. Most people fail not from lack of intelligence, but from repeating the same deadly mistakes over and over. Today, we uncover exactly why you are losing and the simple fixes that can turn your portfolio around forever. Stay tuned for powerful insights that smart investors use daily. Imagine watching your investments shrink week after week, while others seem to win big. This painful pattern happens to millions of investors every single year without fail. The stock market offers incredible opportunities, but only for those who avoid the hidden traps that drain accounts fast. In this guide, discover the top reasons for losses and practical strategies to protect and grow your wealth effectively starting now. The brutal truth is that emotional reactions are silently destroying most portfolios right now. Fear and greed push people into terrible decisions at the worst possible moments. Instead of steady growth, you end up buying high and selling low every time. Learning to control these impulses is the first major step toward consistent profits and financial peace of mind. Why do so many smart people keep repeating the same costly errors year after year? The answer lies in simple human psychology that the market exploits perfectly. Without a clear plan, you react instead of act, and that costs thousands. This video breaks down the biggest reasons for failure so you can finally break the cycle once and for all.
Have you ever felt completely lost when trying to make smart investment choices? You are definitely not alone in this struggle. The market is full of noise and conflicting advice that confuses even experienced people. Understanding the core mistakes will give you the clarity needed to build real long-term wealth without constant stress.
Losing money feels awful, especially when it happens repeatedly without clear reasons. The good news is that these losses are preventable once you know what to watch for. We will examine the most common pitfalls and then show exactly how to fix them so your money starts working for you instead of disappearing. Ready to stop the bleeding in your investment account once and for all? The first step is recognizing the patterns that cause most people to fail. Emotional decisions and lack of strategy are at the top of the list. By the end of this, you will have clear, actionable fixes that protect your capital. What if the real enemy of your portfolio is not the market, but your own reactions to it? Panic selling during dips and chasing trends during booms. Both destroy gains fast. Mastering calm, disciplined investing is the key that separates winners from losers every single time. Most investors lose money because they treat the market like a casino instead of a business. Without proper knowledge and rules, you are basically gambling with your future. Today, we reveal the exact mistakes to avoid and the proven fixes that turn average returns into reliable wealth building. Panic selling during market dips is one of the fastest ways to lock in permanent losses forever. When fear takes over, logic disappears and you sell at the bottom every time. The fix is simple discipline and a long-term view that ignores short-term noise completely. Fear makes you sell low and regret it later when prices recover strongly. This emotional trap has ruined more portfolios than any other single factor. Staying calm and holding through volatility is the proven way to capture full market upside over time. The moment markets drop, most people rush to sell everything in panic. This reaction guarantees you miss the rebound and lose big. Building emotional control through a solid plan stops this cycle and lets your investments recover naturally. Bear markets test every investor, but only the unprepared ones sell at the worst time. Panic is expensive and avoidable when you have rules in place. Focus on quality holdings and patience instead of reacting to temporary fear. Avoiding panic selling requires preparation and mindset shift before the next dip hits. Those who stay invested through volatility almost always come out ahead. This single change can save you thousands in avoided losses. FOMO drives people to buy high during hype, and that almost always ends badly. Greed pushes you into overpriced assets just before they crash. Recognizing this pattern early helps you avoid expensive mistakes forever. The fear of missing out makes investors jump into hot trends at exactly the wrong moment. This emotional buying destroys capital faster than anything else. Patience and sticking to your plan beats chasing every shiny new thing. Greed during bull runs leads to buying at peaks and heavy losses later. The market always corrects, and those who chase lose the most. Discipline and valuation awareness protect you from this common trap. Ignoring fundamentals while chasing momentum is a recipe for painful drawdowns. True wealth comes from steady buying at fair prices, not from hype. Break the FOMO habit and watch your results improve dramatically. Trying to time the market perfectly is another huge reason people lose money consistently. No one can predict short-term moves reliably, yet many keep trying. This approach almost always underperforms simple long-term holding. Market timing sounds smart, but it leads to missed gains and extra losses over time. Staying invested through ups and downs captures the full growth potential. Time in the market beats timing the market every single time. The data clearly shows that attempting to time entries and exits reduces overall returns dramatically. Instead, focus on consistent participation and let compounding work its magic for you. This shift alone can transform your results. Even professionals struggle with perfect timing, yet retail investors keep trying anyway. The cost of being wrong is enormous and repeated often. A better strategy is steady investing regardless of daily headlines. Missing big up days because you were waiting for the perfect entry hurts long-term performance badly. Historical returns prove that being fully invested beats waiting on the sidelines. Stop trying to time and start participating fully. Putting all your money into a single stock or sector is extremely risky and often leads to large losses. Diversification spreads risk and protects your capital during downturns. This basic rule prevents total wipeouts. Lack of diversification means one bad event can destroy years of gains instantly. Smart investors spread holdings across different assets and sectors for stability. This simple step reduces volatility without sacrificing growth. Concentrated bets feel exciting until the inevitable correction hits hard. True safety comes from owning a broad mix of investments that balance each other out. Diversification is your best defense against unknown risks. Over-reliance on a few favorite names ignores the power of broad exposure. When that one holding crashes, your entire portfolio suffers badly. Building a diversified mix is the proven way to sleep better at night. Proper diversification across stocks, bonds, and other assets smooths out the ride significantly. It prevents any single failure from ruining your progress toward financial goals. Start spreading risk today for better results tomorrow. Overtrading with constant buying and selling racks up fees and taxes while missing long-term growth. Frequent activity rarely beats a patient buy and hold approach. Less trading often means more profit in the end. The urge to trade every day feels productive but usually destroys wealth through costs and emotions. Markets reward patience, not constant action. Reducing turnover improves net returns dramatically over time. Every unnecessary trade costs money in commission spreads and taxes that compound against you. Sitting still with quality holdings lets your money grow without those drags. Discipline beats hyperactivity in investing. Overtrading often stems from boredom or the illusion of control, but it leads to worse performance. Focus on quality and long horizons instead of daily noise. This change alone can save you significant money. High transaction costs from excessive trading eat into your returns quietly over years. Minimizing trades preserves more capital for actual growth and compounding. Smart investors trade far less than most realize. Following hot stock tips without research is a quick path to losses for most people. Tips rarely come with full context and often arrive too late. Doing your own homework protects you from expensive mistakes. Blindly chasing rumors or friend recommendations leads to buying overhyped garbage. Real success comes from understanding what you own, not from secret tips. Always verify before investing any money. Hot tips sound exciting, but they usually benefit the tipper more than you. Independent research and analysis beat secondhand advice every time. Develop your own process to avoid these costly traps. Unverified tips often come from sources with hidden agendas or poor track records. Trusting them without due diligence has burned countless investors. Build knowledge so you can evaluate opportunities yourself. High investment fees quietly erode your returns year after year without you noticing. Even small percentages compound into massive losses over decades. Choosing low-cost options preserves more money for growth. Expense ratios and trading costs might seem tiny, but they steal a huge portion of potential wealth. Low-fee index funds and ETFs deliver better net performance for most people. Always check costs before committing. Paying high fees for average advice is one of the most avoidable ways to lose money. Passive low-cost strategies often outperform expensive active management after fees. Protect your capital by minimizing expenses. Every dollar spent on unnecessary fees is a dollar that cannot compound for your future. Smart investors prioritize low-cost vehicles that keep more money working for them. This awareness alone boosts long-term results. Investing without any written plan leads to random decisions and big mistakes under pressure. A clear strategy with rules keeps you on track through all market conditions. Planning is the foundation of success. Without goals and rules, you react emotionally instead of following logic. Define your time horizon, risk tolerance, and asset allocation upfront. This framework prevents costly detours and keeps you focused. A solid investment plan acts like a roadmap during volatile times when emotions run high. It reminds you why you started and what you are trying to achieve. Stick to the plan and watch results improve. Successful investors treat their strategy like a business plan with clear entry, exit, and rebalancing rules. This discipline separates them from the crowd that loses money. Create yours today and follow it strictly. Overconfidence after a few wins makes people take bigger, unnecessary risks. This hubris often precedes major losses when the market turns. Stay humble and stick to proven rules no matter what. Recent success does not make you invincible or smarter than the market. Overconfidence leads to ignoring risk and making sloppy decisions. Humility and consistent process protect your gains better than ego. The market has humbled many overconfident investors who thought they had it all figured out. Respect uncertainty and maintain risk controls at all times. This mindset preserves capital through every cycle. Ignoring proper risk management is how small accounts turn into big losses fast. Always size positions correctly and use stop losses or rules. Protecting capital must come before chasing big rewards. Lack of basic financial education leaves investors vulnerable to every mistake we have covered. Continuous learning builds the knowledge needed for better decisions. Invest in yourself first for better results. Knowledge is the ultimate edge that helps you avoid costly pitfalls others fall into. Read books, study fundamentals, and understand how markets work. Education pays the highest returns of all. The more you learn about investing, the fewer emotional mistakes you will make over time. Start with simple concepts and build from there steadily. Informed investors consistently outperform the uninformed ones. Now that we have covered the main reasons for losses, let us focus on the fixes. The first powerful solution is adopting a long-term mindset that ignores daily noise completely. Patience allows compounding to work its magic over years. Long-term investing beats trying to catch every short-term move by a huge margin, historically. Set your horizon to decades and stay the course through volatility. This approach has created more millionaires than any other. Time is your greatest ally when you stop fighting the market and simply participate consistently. Compound interest turns small regular investments into substantial wealth. Commit to the long game and reap the rewards. Dollar cost averaging is a simple fix that removes timing pressure entirely from your process. And the best part? Invest fixed amounts regularly, regardless of price levels. This strategy buys more shares when prices are low automatically. With dollar cost averaging, you avoid the regret of buying at peaks or missing dips. It enforces discipline and averages your purchase price favorably over time. Most investors benefit greatly from this method. Regular investing through dollar cost averaging takes emotion out of the equation completely. It works in both rising and falling markets by design. Start today and let time do the heavy lifting for you. Diversification remains one of the easiest and most effective fixes for reducing risk. Spread your money across many assets, classes, and sectors. This balance protects you when any single area struggles. A well-diversified portfolio weathers storms much better than concentrated bets ever could. Rebalance occasionally to maintain your target allocations. This simple habit keeps risk in check automatically. Never put all eggs in one basket, no matter how promising it seems at the time. True diversification delivers smoother returns with less stress overall. Make it a core part of your strategy moving forward. Discipline is the ultimate fix that ties everything together successfully. Stick to your plan through good times and bad without deviation. This consistency is what separates profitable investors from everyone else. Emotional discipline prevents panic selling and greedy buying at wrong moments. Write down your rules and review them regularly to stay on track. Strong discipline multiplies the power of every other fix. The best investors are those who follow proven principles even when it feels uncomfortable. Discipline turns good strategies into great long-term outcomes. Cultivate it daily and watch your wealth grow steadily. Switching to low-cost index funds is one of the smartest fixes available today. They provide broad market exposure with minimal fees and strong historical performance. Most people need nothing more complicated. Index funds let you own the entire market without trying to pick individual winners. Their low expenses mean more of your money stays invested in compounding. This passive approach beats most active strategies after costs. Broad market index investing is simple, effective, and requires almost no daily attention from you. It captures overall growth while avoiding individual stock risks. Consider it your default long-term vehicle. Periodic portfolio rebalancing keeps your risk level aligned with your goals automatically. Sell a bit of what has risen and buy what has lagged to restore balance. This disciplined step enhances returns over time. Rebalancing forces you to sell high and buy low systematically without emotion. It maintains your target asset allocation through market cycles. Make it a yearly habit for better risk-adjusted performance. Regular reviews and adjustments based on your plan keep everything on track without overreacting. Stay informed, but avoid constant tinkering that adds costs and stress. Consistency always wins in the end. By avoiding the mistakes we discussed and applying these fixes, you can finally stop losing money. Your portfolio will grow more reliably and with far less worry. The power is now in your hands to build real wealth. Imagine the freedom that comes from a portfolio that works for you instead of against you. These changes are straightforward and available to anyone willing to apply them. Start implementing today for tomorrow's success. Take control of your financial future by committing to these principles right away. Consistent action beats perfect timing every single time. You now have the knowledge needed to succeed where others fail. The stock market rewards those who learn from mistakes and apply simple fixes diligently. Your journey toward profitable investing starts with the very next decision you make, and make it a smart, disciplined one. Thank you for watching and taking the steps to improve your investing results. Apply what you learned here and watch your losses turn into lasting gains. Share this with friends who need it too. Remember that consistent, small improvements compound into massive financial success over time. You have everything you need to stop losing money and start building wealth. Go make it happen starting now.